Hello, good afternoon, or good morning, and welcome to our webinar titled What's Behind the Surge in Online Fraud and How to Stop It. My name is Melisande de Mouval, publisher of the papers, and I'm delighted to co-host this webinar with Fietsai, a market leader in fighting financial crime with AI. And it's great to see so many of you tuning in today. Thank you so much. So what's the story? Account takeovers are on a steady rise. And these attacks grew by more than 90% since the beginning of the pandemic. And if a fraudster successfully commits an account takeover, they get their hands on all the data they need to commit even more fraud. So, with all the solutions available to stop this, why has the industry not been able to stop account takeover attacks before they can actually harm people? So, today you will learn what's behind this surge in account takeover attacks and what can be done to reverse the trend. And how can financial institutions ensure customers are real at every interaction? And lastly, how enriching transaction management solutions with real-time customer interaction data can improve the decisioning process. So before introducing the speakers, I would like to start with some quick notes regarding housekeeping. The discussion will take approximately 35-40 minutes, and we will have 10 to 15 minutes for a Q&A at the end of the discussion. So on the right side of your screen, you can see the chat panel, which includes a chat room and a Q&A widget. You can use that Q&A widget to ask questions at any time throughout the discussion. We will compile your questions, and the speakers will take as many as possible at the end of the discussion. So today I'm joined by Daniel Holmes and Nora El Azouzi. So Daniel and Nora, it's great to see you today. It's a sunny day in Amsterdam. I hope it's sunny in Frankfurt and Leeds as well. So how do you do today?
Thank you very
Very
much.
well.
Very well.
Good to be here. And we do have some sun in Leeds as well today, which is highly unusual.
Highly unusual.
But we'll enjoy it while it's here.
Cool. Well, let me briefly introduce Daniel and Nora. Daniel is fraud prevention subject matter expert at Fietsai and works with banking customers in EMEA. So prior to joining Fietsai, Daniel worked at LexisNexis Risk Solutions as a director of solutions. And before that, he held several fraud-related roles at Lloyds Banking Group. So Daniel, you worked on both sides, on the bank side and on the solution provider side. What learnings did you bring from Lloyds to Fietsai?
So I think when I was at Lloyds, I think what we had was 15 million online users who we needed to protect. We were in an era where we were moving from web-based banking to mobile-first banking, and going through that transition and the learnings that we got from that process were invaluable as I now work on the technology side. I think the key differences are that when we're at Lloyds, we get the low-level detail of exactly how the fraud's happening. You get to speak to the end customers and understand how their details were compromised or how they were scammed by a fraudster, whether it be investment scam, romance scam, etc., etc. So you get a really deep view, but you don't necessarily get a broad view on what's going on in the industry. And as we brought on new technology providers, I was fascinated by some of the emerging technology in the market, and that's what led me to make the move to the technology side. And what we get here is we get a very deep view of one technology arm, but we get a very broad view of how that technology arm is used to solve various problems in different markets. And I'm sure we'll get into today, what the challenges in different markets and different bank types look like, and I can elaborate on that as we get to that part of the conversation.
Lovely, thank you, Daniel. And Nora El Azouzi is head of anti-financial crime and money laundering reporting officer at Solaris Bank. And prior to joining Solaris Bank, she held various positions at Deutsche Bank in AML compliance and AFC risk. Most recently as EMEA anti-financial crime risk and controls officer. So Nora, you've been working at anti-financial crime for over a decade. What keeps you motivated in this fight against financial crime?
Well, I ask this question every day myself, but I guess I'm a person who likes challenges, and everyone who works in the AFC space might agree that one day is never like the other day. So, and I think also being part of protecting the bank and its customers from any attempt when it comes to fraud or money laundering is a meaningful task to do. So
yeah, that's definitely meaningful, challenging, and indeed, I guess there's no day is the same day. So thank you, Nora. Thank you, Daniel. And for the audience, do take the opportunity to reach out and ask your questions to Daniel and Nora. They would love to take them. Daniel, as mentioned before, account takeover attacks increased with over 90% since the start of the pandemic. And before we do a deep dive into the numbers, could you please tell us, how do you define account takeover?
Yeah, good starting point. Let's level set in terms of what we mean by account takeover, because the terminology used to describe this can often be interchangeable depending on which market you're operating in. But essentially what we're saying here, Melisande, is fraudsters executing unauthorized transactions on customer accounts. So that could be compromise of a PAN number that results in a CMP transaction. It could be compromise of user ID and password credentials, which enable the fraudster to enter mobile banking, online banking platforms, and then they try and monetize using those details by sending money on to mule accounts. So essentially what we mean at a high level is third-party compromise that results in an unauthorized transaction. And you typically break it down into two parts. So there's part of that happens outside the bank's domain, and that's the credential compromise. That can happen through smishing, phishing, all the different types of phishing that you want to describe. Of course, it can occur through data breaches and other means as well. And then the fraudster will take the details that they've compromised via those various methods and take them to part two, which is inside the bank's domain. And that's the part, of course, then where the bank has an accountability to protect not just their consumers' money, but their consumer and customers' data as well. Hopefully that clarifies.
Nora, anything to add to this definition of basically unauthorized access to user accounts?
Yes, I think Daniel quite described it very well. So maybe to add an example, what we are seeing in the day-to-day business is, for example, a pattern that is very often identified is that it seems, for example, homeless people seems to be an easy victim for fraudster. So and they will reach out to people, sometimes using the same device, and asking them to do the identification, and then getting through their mobile the credential for this account. So that is something, an example that we are seeing in the day-to-day business.
Yeah, that's sad. But thank you, Nora, for adding this. This case. Let's look into some numbers. Maybe we can see the slide here. And Daniel, my question for you would be: could you walk us through these Takeover numbers? I mean, how did we end, and how did we end in this position, despite the fact that the technology is there to detect, but also prevent this from happening?
Yeah, thanks, Melisande. I think if we move from left to right, covering these numbers, you've almost got the three challenges. So you have ATO on the left, you have an emerging threat, which is scams and authorized fraud in the middle, which we'll talk a little bit more about, and then you have the identity issue on the far right. So starting with the account takeover and the 92% increase that we've seen there, I think there's probably three reasons that we've seen this spike so much, and one of them is a fairly obvious indicator in that we've had the pandemic. And one of the repercussions of the pandemic is that it's forced consumers that traditionally did their banking in more traditional ways, such as visiting branches, for example. It's forced them to do their banking in different ways, such as online and mobile banking. So the risk exposure from the bank's perspective grew significantly as a result. Not only did it grow, though, the consumers that were then forced to bank that way, they weren't necessarily consumers that were entirely comfortable with the notion of banking online. So they weren't necessarily well-informed or savvy consumers. And as a result, they were more vulnerable perhaps to dishing out some of the credentials in some of the ways that we described earlier. So I think that was the first reason. I think the other thing here, I was at a really interesting event a few weeks ago, and a similar question to this was asked to a chap that was actually a former fraudster, now turned consultant. And his view on this was that during the pandemic, because of the resulting lockdowns, a lot of criminals that had, let's say, committed more traditional crimes such as break-ins and petty crime, they were no longer able to do that because shops were closed, people were at home all the time. So the criminals themselves actually retrained to become online fraudsters. So not only did you have more customers coming online and therefore the risk exposure going, you had more fraudsters actually attacking the banks and e-commerce websites, etc., etc. And then I think the final arm here is just around the explosion of new payment means, such things such as BNPL and embedded finance, all these different ways in which consumers can now interact with their banks and with e-commerce websites. New channels is a great, exciting opportunity for fraudsters to go and tackle them and see how well they're protected. So I think a combination of those three things is what's resulted in the increase in account takeover. And as you alluded to earlier, there are a number of great solutions available now to help banks protect themselves against account takeover. Things like device recognition, behavioral biometrics, location patterns, etc. It has enabled banks to get a reasonable handle in terms of detection when an account takeover fraud takes place. And in certain parts of the world, what that's done is it's actually forced the fraudsters to think a little bit differently about how they now attack the bank. In some cases, no longer is the bank's fraud ecosystem the weakest part of the chain like it used to be. The weakest part of the chain now is actually often the consumer themselves. So rather than trying to attack the bank directly, what they're doing is they're calling the consumer and they're coming up with some elaborate story, usually playing on emotions such as fear or greed. Perhaps it's an investment scam or an impersonation scam or something like that. And they're convincing the victim to make a transaction on behalf of the fraudster. So that changes the paradigm and the shift in terms of how the bank has to defend. They have to start thinking more holistically. They have to start thinking about consumer education to these risks and things like that. And that's the reason that particular pillar has increased so dramatically over the last couple of years. And then finally, I think the identity fraud is a very simple outcome. If you're committing more fraud as a fraudster, you need to have more mule accounts in order to send that fraudulent set of money to. You have to control the mule account in order to cash out. Otherwise, there's no monetary value and no end value from the fraudster's point of view. So I think the rise in impersonation fraud has often been as a result of trying to onboard more mule accounts into the mule network so that when they're committing the account takeover fraud, when they're committing the scams, they've got a ring of accounts that they can send that money to and ultimately control and ultimately cash out. So that would be my take on the statistics that we've got on the screen now.
Yeah, brilliant, Daniel. And Nora, anything you see, what you have seen and what basically explained these staggering numbers?
Yeah, I mean, it's clearly that what we have seen is, in general, the let's say the increase in cybercrime, right? And this is we have seen statistics worldwide that there is an increase not in both the number of attacks, but also the way how criminals are acting. So they become always smarter in their strategies, in the way. And I think this is really like key problem and that we see everywhere globally.
Yeah, and if we look into the actual losses, what Daniel, what is the average value of losses from account takeover of financial accounts?
Yeah, so it can differ depending on geography and the economy of the country that you're attacking, and the assets that the bank and the consumers have, of course. But it also differs wildly depending on the type of fraud that we see as well. In some parts of the world, the average loss from scams and account takeover can be in excess of $12,000 per case. If you think about a fraudster that attacks a commercial business, commercial banking platforms, they tend to be lower volume of frauds, but higher value frauds when they occur. Whereas if you flip that around, you think about more traditional retail and consumer banking, actually it's the opposite that's true. It tends to be a much higher volume of fraud, but it's actually a lower average value that the consumer loses. And that's why you have to be adaptive and reflective of that in the defense strategies that you put in place as a bank. Things like machine learning, etc., and AI are fantastic, and they do a really good job. But a prerequisite of that is that you need a large amount of data in order for the models to learn. So when you've only got 5 frauds per month at a commercial level, but each one of those averages $1 million, then you need to think a little bit differently about how you approach it. So it varies wildly, but in some cases can be as high as $12,000.
Yeah.
And sorry, no, Sandy. One thing I was going to add is that we've actually just got a couple of handouts as well that are available for download, and it just goes into a bit more detail on some of the attack types that we've described so far on the site.
Yeah, I think I was just about to mention this, Daniel. Yeah, so in that chat panel that I mentioned, where there's chat Q&A, you can also find a handout. Yeah, so if you want to learn more about account takeover, the numbers, and how to fight it, there are some really interesting handouts that you can download. We talked a little bit about technology. You mentioned a couple of technologies and AI, but we would like to ask the audience a question, and we would like to learn from you. What do you see as key technologies to prevent account takeover fraud? Is that device recognition, transaction monitoring, behavioral biometrics, or all of the above? So do submit your answer, and we will give you a couple of seconds to get the results. It'd be interesting to see what the audience view on this is, what the audience take is. Yeah, so let's have a look at the results. So it's interesting. The majority mentions all of the above, followed by device recognition, behavioral biometrics. Great. So let's close it, and I would love to learn from you, from Nora, and from Daniel. What is your take on this?
So I'm not surprised that all of the above was the most popular. I think there's a general consensus within market that in order to be as effective as you can be from a preventative standpoint, that a layered approach to controls is the right way to go. So things like transaction monitoring have their place for certain fraud types. Device recognition has its place for fraud types, and behavioral biometrics has its place for certain fraud types. But ultimately, collating those together and using them in the smartest way possible is what's likely to drive best results. Probably the most intriguing point was that nobody selected transaction monitoring. It's almost as though that's the old guard, and things like device and behavioral biometrics are the new shiny things that people are more attracted to and see as more interested in the prevention side.
Yeah, Nora.
Yes. Yeah, thank you. So I'm also not surprised about the outcome, and to be honest, I mean, so what we see in the day-to-day business, transaction monitoring is clearly a strong tool, right? So having the right scenarios with the right thresholds to identify certain suspicious transaction that will help to protect the bank from these financial agents, as we call it. I think earlier I mentioned the example of homeless people who are very often misused for being a financial agent. And if we stick on that example, so what is typically in that under that pattern is that one device will be used with multiple identities and accounts, and this is something that you clearly can detect with a strong device monitoring, right? When you can clearly see that one devices are in control of multiple accounts. That is a very, very typical pattern, right? But then also in terms of technology, talking about the praxis, what also helps us a lot in terms of protecting the bank, I think KYC is also key, having a strong KYC process, and trying to avoid even that the financial agent will be onboarded. So, one very powerful tool is that has been integrated is customer vetting, as we call it. So this is something that is quite a dynamic system where we can include pattern that we are seeing in the daily basis. We identify pattern, and then we can include this pattern into this tool, and it will generate a red flag in the onboarding process. So this is also quite a powerful tool in order to protect the bank.
Yeah, and in terms of the account takeover, to what extent is location? Because it was not part of the poll question, but how important? I remember once that I had an account takeover myself. It was actually via a sort of a marketplace, peer-to-peer marketplace, that I was so stupid to go outside the platform. And then I was very happy that my bank basically was faster than I in recognizing, oh, that this is an account takeover. And it was very much the location. It was, of course, the device ID, but also that they said, hey, the location doesn't make sense because usually this is not a place where you are.
Yeah, 100%. And yeah, it wasn't in the poll, you're right, but it is a key part of any fraud strategy, particularly for account takeover prevention. Understanding where your consumers normally interact with you from, understanding that over a significant period of time so that you can start to normalize perhaps their place of work versus their home address, maybe even on that commute between work and home, even to the point of understanding, where they're socializing on a weekend. It's all possible from the data collection ability of mobile devices and web browsers now. So recognizing when there's a transaction, not just in a different country to what you normally see, but a different IP address, or even something that's being used to perhaps block the location, like a VPN or like a proxy. Those things can help mask the fraudster. And often I think the fraudster thinks they're being clever by doing that, but often all it's doing is waving a red flag in front of the bank's eyes because the customer's never used a VPN in the past, and now all of a sudden they're using a VPN for the first time. Combining that with some of the other things that we've seen, it can make a significant difference to your ability to detect.
Yeah, so it's very much, as you mentioned, and also for the audience, it's a layered approach.
Correct.
But what are the next developments from a technology perspective then?
Yeah, so I think ultimately when we think about the broad array of things that are available, we've touched on device, we've touched on behavioral biometrics, we've touched on transaction analysis. We haven't touched on some of the things that are perhaps regulatory mandated. So malware detection is part of PSD2 and the strong customer authentication program. You must scan your customers' devices to ensure that there's nothing malicious that's active on there at the time they're interacting with you. All of these things have been iteratively deployed over a period of time. So transaction analysis has always been the core of any good fraud engine. If you go back 5 or 6 years, it was all about spotting the payment anomaly rather than thinking about any of these enrichment services that we've just mentioned. But as banks have added in device capability, as they've added in behavioral biometrics, as they've added in location, often that's been done in a fragmented way. And you've often got multiple decisions being made on the same transaction by different services. And I think that's getting to the point now where inefficiencies are starting to be identified. And I think ultimately we're almost going full circle here. And I think vendor consolidation is likely to be the next thing that we've seen, that there's one central engine that can consume all this data and layer tools on top of that, like machine learning combined with rules, in order to enable the banks to make the best decision using all the technology capabilities that they have. Ultimately, these tools will overlap in some ways, but what do you do if one tool says stop the fraud and the other one says no, it's fine? You need a way of those systems talking to one another in order to drive the best outcome for your consumer. So I think consolidated risk platforms is ultimately one of the first things that we'll see. I think also as the fraud risks change, the way in which you're using things like device and behavior also needs to change to be reflective of the risk. One of the products that FeesI offers is a behavioral biometrics and a device capability, and we're often thinking about from an R&D perspective, what new data signals can we get from the device? Would these things be useful in a fraud decision? And one obvious one that springs to mind is when you think about how a scam plays out, it's me calling Nora and convincing Nora to do something she wouldn't normally do. So while Nora's doing that on a banking app, what if we could see that Nora was on an active phone call at the time she's doing that? That's another really interesting signal to factor into your overall risk outcome. So I think enhancements to those existing capabilities are true. And then the final thing I would say, talking about next gen, I mean, it's almost old school, but with a new spin, thinking about the way in which we educate consumers. So it's not just about the technology. How do we educate the consumers to make sure that they're always aware of the latest fraudster risks and trends? And how do we do that in a way that's timely and dynamic rather than just hiding it away in the corner of an online banking website like we might have done in the past? We're starting to see banks, particularly in the UK, engage with customers via social media, via YouTube, via TV adverts, via radio adverts, also in channel at the time when they're about to make a payment. So you can kind of think about a consumer in a hot and cold state. It's great educating them when they're in a cold state, but then to expect them to remember that information that you give them when they're in a hot state and they're potentially under duress and being scammed is actually quite difficult. So presenting the right education and awareness to them at the right time, at the moment when there's monetary risk, is also really important. So I think banks are starting to think about how they can educate their customers in different ways to the way in which we've done it in the past. And combining all these things together, I think, is what we'll see the banks do over the next 12 to 18 months.
Yeah, and Nora, you're working at a bank.
Yes.
Daniel is talking about you, but what do you see as sort of the next developments in technology?
Yeah, I mean, clearly this goes in artificial intelligence, machine learning systems. So actually where we have, let's say, where the technology can identify certain pattern and provide red flag when it comes to the onboarding process, but also in the transaction monitoring process. So clearly, I mean, for the time being, when we are talking about transaction monitoring, classically, most of the bank will have their scenarios, their thresholds, but I think that is something that is crucial and that is something that will remain. However, on top of that, it would be very helpful to have also a technology in place that identify pattern and then also generate the respective alerts. And the same applies for the onboarding process, right? So actually, I described the customer vetting process. So where a pattern are manually defined, identified by AFC team members, by, let's say, KYC staff team members, and also having here a supporting technology which identify pattern and generate the red flags.
Yeah, and that has to be done real time. Yeah? So it's like so that's the challenge where AI and machine learning also comes in. So Nora, I was wondering, because before joining Solaris Bank, you worked at Deutsche Bank. So how are the challenges different from a traditional bank versus a neobank perspective?
Well, clearly, I think being digital, right? And I mean, I think it is much easier to open an account online, so where you don't need to go to a physical presence, to a branch in order to, let's say, do the identification and verification. So that is clearly, I think, the main difference between a traditional and a neobank.
Yes, digital first.
Digital first, yes.
And what are the different challenges there? So to what extent does it sort of, raise the bar in terms of, how you protect your customers and still enable sort of a smooth journey?
Well, it is key for neobank. I would say they are more focused on customer. Customer centricity is a key topic for neobanks, where traditional banks, I don't want to say they don't care, but I think neobanks are really more engage with the customer in order to satisfy customers' needs, in order also to provide the products that is needed by a customer, whereby a traditional bank, they have their products, they have their portfolio, and this is what you get. And this is a huge change, I think, but that also make the challenge in terms of, being quite dynamic, fast moving, and also finding the right balance when it comes to AFC risk.
No, exactly. I think so that's even a more challenging environment for someone in your position. And then you work with a lot of banks across EMEA. What do you see? Do you see differences in different type of banks?
Yeah, absolutely. So I agree with all of what Nora said. I think one of the other key differences that I would highlight would be from a data management perspective. So let's call them the more traditional banks. That's the right term. They've kind of grown through many areas of financial consumption. So they've seen debit cards, they've seen faster payments, they've seen online banking, they've seen mobile banking. And the neobanks, of course, have entered the market at the point that mobile banking was exploding. But what that means is, as the traditional banks have kind of continued to move through that journey, they've got the classic issue of legacy architecture and data management scenarios where you've got one system that's making a decision on debit cards, you've got another system that's making a decision on credit cards, you've got a third system that's making a decision on digital banking. So to Nora's point, you're not necessarily understanding your customer holistically. You're understanding them as a card, as a user ID, or perhaps as a telephone banking customer ID. You're not understanding the 360-degree view of the user, whereas neobanks are very good at that. Granted, they've got it easier because they've generally got smaller numbers of consumers, at least for now. But understanding the customer, regardless of which channel they interact with you through, is absolutely key if you want to make the best fraud decisions. A really crude example is if somebody makes a debit card transaction in Frankfurt at midday and then logs into their online banking in London at 10 past midday, it's infeasible for that person to have travelled that far. So using your location analogy from earlier, Melisande, there's clearly a risk there from a fraud perspective. But if your systems respectively aren't talking to each other, then you can't tease out that risk in your analytical capability. So having all that data in one place is something that I think the neobanks are doing really well. I think it's something that the traditional banks are striving for, but I think when they can achieve that, it will really be a needle mover in terms of the overall detection capability that the banks have.
Yeah, no, makes perfect sense. Hey, and Nora, do we see differences from a geographical perspective, differences between countries?
Yes, there are differences, and unfortunately, that makes also or provides also, let's say, an additional challenge. So, for example, there is no harmonized EU market when it comes to identification requirements, right? So you will find in one location there are certain identification methods accepted, in other not. So, and that is really providing additional challenges in terms of, establishing a harmonized process.
Yeah, so there's no harmonized. Is that within the EU?
Within the EU, yes. Even within the EU, unfortunately, we're not talking about overseas, but even within EU, you will see that in certain locations, certain identification methods are allowed and in others not.
Yeah, that complicates matters. And Daniel, what do you see also outside Europe in terms of differences?
So I think ultimately all the challenges that we described at the start are prevalent in all markets. I think the weighting of them is different in respective markets. And I think a lot of it depends on two things: where the country is as an economic ecosystem and the payment capabilities that they have. There's a really crude line, but faster payments generally equals faster fraud and more fraud. So countries that have got faster payments and have had them for a while tend to be a little bit ahead of the curve in terms of some of the risks that they see, a little bit more mature, and therefore with the technology that they've got to defend against the frauds. As a former practitioner, that's always an interesting paradigm in that you want to bring in the fraud technology for the risks that will come in future. But it's hard to build a business case on fraud that hasn't happened. So fraud just by nature becomes reactive in that sense. But I think the countries that have got perhaps the scam risk are the ones that have adopted a lot of the technologies that we've already described, and they've moved the problem. And UK is a classic example of that. Whereas if we look at the US market, for example, faster payments aren't necessarily as widely adopted and widespread over there. So they're still facing some of the more traditional account takeover challenges that we described at the start. And I was actually speaking to a bank in APAC this morning prior to the webinar. So when you look over to the east and you think about the Asian market, they're somewhere in between those two, I would say. So they're starting to see the transition from account takeover into authorized fraud and into scams. And naturally, they're looking now globally to understand what best practices should look like. One of the benefits of being a follower in terms of how your fraud threats matured is that you can learn from countries that have been through that curve already. So you can avoid having to move through the same learnings and get straight to the point where you've got a best practice solution in place. One thing we didn't touch on earlier when we spoke about best practice is collaboration. I think collaboration between banks, not just within country, but on a global level is really, really important. I think we're definitely starting to see more of it. I know UK Finance push a lot of that kind of stuff here in the UK, and there are similar respective forums in different parts of the world, but it'd be fantastic to start seeing banks on a global level sharing some of the best practices and some of the things that have helped them succeed when it comes to ATR detection and consumer protection.
Yeah, and to what extent do you see that collaboration? Because I guess fraudsters do a better job there in sharing knowledge and in and bridging knowledge gaps.
Yeah.
You mentioned an example in the UK, but what do you see happening in Europe or in other parts of the world?
Yeah. Fraudsters are really good at that, and it's actually quite annoying as a fraud practitioner that they do talk so frequently, and they are willing to upskill each other if that's the right term. Fraud is a service and is a business after all, I guess, right? So I think from my observations, we're definitely seeing some in-country and some localized collaboration. I think we're struggling to see it on a more global level. It's something that we're certainly trying to facilitate. We have customers on a global scale, and we're trying to bring them together more frequently for advisory boards and user clubs and things like that. But ultimately, despite some of the huge companies that we're working with, we're still only working with a small percentage of all the banks globally. So, we can only affect what we can affect in that sense. So I think locally we're starting to see some good traction. I think globally there's still a little bit of work to do for the US to learn from APAC, the APAC to learn from the UK, etc.
Yeah, no, good point. But let's ask the audience another question. So maybe we can have the second poll on, because we would like to know what of the following fraud types currently creates the most pain for your institution. Is that account takeover? Is that scams? Is that rat, remote access Trojan? Or is it others? So please do submit your answer here, and we will have a look into the audience. What did you expect, Nora?
Account takeover. It should be, I think, the majority.
The majority.
Yeah.
And Daniel?
I am going to sit on the fence and say I think it depends where our delegates are in the world.
Yeah, smart. But let's close. let's close the poll and look into the results. Well, it's scams number one, followed by account takeover. So that's interesting. So maybe scams is the next big thing. Any thoughts from you guys?
Yeah, I think it broadly aligns with what I'd expect to see. I think we're predominantly appealing to a European audience, and I think, as we said at the start, that ATL challenge is quickly transitioning to scams as the banks do a good job of defending ATL. The forces are looking for a different route to military success. So I'm not surprised to see that scams is the one that's leading the way. I thought actually it might have even been a little bit higher. On average, in the UK, we're seeing around 70% of fraud losses now being scam losses. So that suggests that we've got probably people from different parts of the world where the pendulum's more in the account takeover pot rather than in the scam pot. But yeah, interesting results.
Yeah, Nora, anything that you would like to weigh in here?
Yes, I mean, as I said before, my expectation have been account takeover. So, yeah, I think it's the one or the other. So I think scams is also quite often the case. And for the future, I mean, from my perspective, what I see is that the account takeover start to be under control somehow. So I think banks have really start reacting and putting quite strong measures in place. And it is what you typically see also every day in the AFC space, right? When you have controlled one area, so then you see an increase in the other area. And from my perspective, I would have said that expectation is based on the fact that the account takeover comes slowly but surely under control, that you will see an increase in the scams.
Yeah, and that's exactly what I guess the audience, and to Daniel's point, primarily European, we have SCA maybe had also had an impact on account
it's a good point. It's not something that we mentioned as part of the rationale for transition, but it's very early days, particularly in the UK market for SCA. It's only been live for a couple of months, but the general consensus coming out of the data so far is that it has had a good impact in terms of preventing unauthorized fraud losses, in particular on the card not present side. So again, reality is you never really solve the fraud problem. What you do, to Nora's point, is you move it. So I think that's another factor absolutely in the transition to the customer being the weakest link rather than the fraud technology and the regulation.
Yeah. That also means that it could move from Europe when it's about the card non-fraud present, card CNP fraud to the US, and also account takeover, apparently. So we have a last question for the audience, because we would love to know what you see as the primary future fraud threat in online and mobile banking. Scams, malware, automation, more account takeover, or other? So it would be interesting to see what we see here. So let's close the poll and see what the results are. So again, scams, followed by equally automation and more account takeover. Last comment from you, Daniel, before we go to the questions.
Yeah, so I think the malware one is also really interesting. I think this is something that we're starting to see as an emerging threat within the market. So malware has typically been a threat that you would associate with online and browser-based banking rather than mobile banking. But as the consumer has moved their preferences and as the banks have moved their preferences to the mobile channel, I think what that's done is it's now encouraged the fraudsters to go and develop malware that's capable of attacking mobile apps as well as banking websites. So I think we'll see that as an emerging risk for sure. I think until now it's always been something that you kind of think is bubbling away under the surface, but you haven't really seen the spike of attacks that we need in order to really justify an investment and justify a more holistic strategy around it. But yeah, it was interesting to see that one. I think SCA also has a part to play when it comes to malware as well. SCA has driven more authentication. Very common authentication methods are SMS OTPs and push notifications. Lo and behold, they both go through a mobile device in order for the consumer to complete those journeys. So mobile malware has the option and capability to perhaps retrieve the SMS OTPs from the user's inbox and send that back to the CNC that the fraudster can then use to pass authentication. So interesting to see that the people we have on the call here are actively thinking about malware as a future risk as well.
Yeah, thank you. And thank you for now, Nora and Daniel, for sharing all your insights into what technology is out there that helps to solve the ATO problem, and how AI technology enables you to really know the user and take back control. And lastly, I guess for all of you, be on the watch for scams, malware, and particularly on the mobile channel. So for now, I would love to start with the questions. We have some questions from the audience, but please send in more if you like, and we will take as much as we have time for. One of the topics you addressed was consumer education. What type of consumers are most vulnerable, and what can FIs do to offer these consumers more protection?
Yeah, so when you think about things like scams in particular, and that could be in the sense of the user making the transaction on behalf of the fraudster, it could be in the sense of them falling for a phishing or a phishing attack to provide credentials to the fraudster to enable them to do unauthorized fraud. Your mind traditionally went towards the older, more vulnerable members of society. And whilst that's true, we've actually done some analysis on this, and what we've seen is that actually, yes, that is true. Older consumers are more likely to fall victim to fraud and scams, but also the younger generation are also very susceptible to fraud and scams as well. So when you plot the age on a chart, you end up with a U shape in that you've got a lot of the older people, but also a lot of the younger people. And the hypothesis on why the younger people tend to fall for these scams is really interesting. You know, my take on this is that this is the first generation that have really grown up in a pure digital and online world. Some of these people may have never been to a branch outlet in their life. They've opened their account through their mobile app. They've continually transacted through the mobile app. They've spoke to bank representatives through the mobile app. They're just more accustomed to giving their data away when asked for it. They complete web forms multiple times a day to sign up to various services. So I think they're just a little bit more relaxed about pushing their data out onto the web. And as a result, that makes them more susceptible. I think there's also that concept of fear and reward that we spoke about earlier as well. The older generation tend to be more susceptible to the fear tactics, as in your accounts are at risk, please take this action. Where the younger generation tends to be more susceptible to the greed emotion. You know, we will double your deposit into this crypto exchange if you send us $2,000 today. That kind of tactic. So that would be my take on the who. I think in terms of the education piece, naturally, just their demographic demands that you must educate them in different ways. You know, older consumers are more likely to consume information in different ways to younger ones. If you want to reach the younger ones, banks need to engage with them through social media and through the channels that we described earlier. So I think there definitely needs to be a different approach to that as well. But interested to hear Nora's view.
You just give quite a comprehensive take, I think. Not many to add from my side, to be honest. So I think I fully share your view and agree with what you have said. So nothing to add from my side.
Yeah, no, I think it's a good point that you mentioned that, you know, it's not only the elder, you know, people new to commerce or new to online banking, but also younger generation that might have more FOMO. You know, it's just a different way of approach for scammers to get access of their accounts. Another question is related to GDPR. How do you deal with the GDPR regulations in applying checks on a client device or transactions?
Yeah, I can take that one. Given that I guess it's more of a technology-led question. So to address the question specifically around device and behavior, I think the way in which these technologies work by design, they're enabled, or they enable rather customers and banks to be GDPR compliant, and they do that in a way that means they don't take any personally identifiable information from the device as they're profiled in it. So how it works at a technical level is, if we use a mobile app as an example, technology providers will embed their own SDK into the host apps of the bank. And when they profile to collect the user's device information, to collect the customer's behavioral analytics and behavioral information, there's nothing collected from that session. It's not scraping any data such as you know, name, address, user ID, passwords, etc. It's purely gathering the behavioral data. So what that means is that when that data is sent back to an algorithm or to a host data center for analysis, there's nothing in that data block that can identify the consumer. It's simply just a block of behavioral data. So that's the primary reason and the first reason. The second thing then, in order to be GDPR compliant, is that if we've got a European customer, we will host the data in an EU data center. So whether that be the vendor owning their own data center in the EU, or whether it be them using a public cloud such as AWS, but having a part of that infrastructure that sits within the EU, such as Dublin, for example.
Yeah, clear. And the last question we have is on, you know, you mentioned some, you know, emerging like buy now, pay later, embedded finance, embedded payments. What are sort of the emergent risks in this new, relatively new ways of transacting?
Yeah, so I fundamentally don't see a difference in risk type. I think these are new payment channels, but ultimately the fraudster tactics will have to be the same. They'll either have to compromise data in order to commit an account takeover attack, or they'll need to convince a customer that they should transact on their behalf through one of these new channels. I think that the NPLs had a lot of focus, rightly or wrongly, for varying reasons. You know, we know it's been good for things like merchant conversion, because customers are more likely to buy more items when BNPL is offered as a payment method. But equally, the risk or the downside of that is that it puts consumers into debt when they frankly don't need to be in debt. So I don't want to get into that philosophical debate around whether it's a good thing or a bad thing, but ultimately the risks are the same. It can be somebody taking over somebody's BNPL account with a new device, demonstrating new behaviours from a new location and using it to make purchases through that account. Or it can be somebody scamming the victim in order to go ahead and make that transaction on their behalf. BNPL, I think, ultimately is going to have some regulation wrapped around it, and that will hopefully firm things up in terms of what good looks like and what bad looks like. Sorry, I had somebody come in the house behind me. And then open banking is something that I think we're kind of waiting for that to really emerge as a core banking channel. And I think as more consumers migrate to using open banking, then the fraud will follow. So that analogy I used earlier of consumers becoming mobile first has meant that mobile malware, for example, is becoming a threat. I think as more consumers enroll in open banking services, whether that be aggregation service providers or payment service providers using those rails, then I think we'll start to see fraudsters try and exploit that. But whilst ever there's still not a massive amount of people using those rails, then the size of the prize really isn't there for the fraudster, and there's other fruitful opportunities that they'll prioritise ahead of it.
Yeah, all clear, Daniel. So I think we're at the end of our webinar. I would like to thank you, Nora and Daniel, for your time, but also for the audience to tune in with us and for engaging with the speakers. So what we will do, we'll send you all a link to the webcast shortly. And we will get back to questions that we did not have time to include during this webinar. I wish you all a very good rest of the day and hope to see you next time. Thank you. Bye-bye.
Thank you.
Thank you. Bye.
Bye-bye.